Welcome back. Today we're going to talk about the Adani Group. It's basically a conglomerate of companies in India with business bodies all over the place. They're involved in ports, agribusiness, logistics, real estate, power generation, and more. Think of them as a jack of all trades but with a focus on making a difference in India. Or maybe in simpler terms, they're like the Swiss Army knife of Indian businesses. The Adani Group was founded by Gautam Adani in 1988 and has since become one of India's largest conglomerates with a presence in several countries. With a focus on driving economic growth and providing sustainable solutions, the Adani Group has made a significant impact in areas such as infrastructure development, renewable energy, and more. Whether it's building world-class ports, providing access to electricity for everyone, or driving innovation in agriculture, the Adani Group is at the forefront of these changes and progress in India. But they're often the center of various controversies as well. Well, let's just say that the Adani Group has had its share of challenges, much like any other corporation. But they've been accused of everything from environmental destruction to labor violations to corruption and other things. Some people argue that the company has been a catalyst for positive change in India, while others argue that its actions have had a damaging impact on local communities and environments. They've been accused of everything from environmental destruction to labor violations to corruption. For example, the Adani Group's Carmichael coal mine project in Australia has been a source of contention, with environmental activists claiming that it could harm the Great Barrier Reef and contribute to climate change. The company has also faced criticism for its labor practices and its treatments of workers, particularly in India. So, what's the latest scandal about the Adani Group now? International financial institutions have reaped the rewards of the Adani Group's insatiable hunger for borrowing. However, now the conglomerate is facing allegations of perpetrating the grandest deception in corporate history. Based on a comprehensive 2-year investigation into their group, the Hindenburg Research Group recently accused the conglomerate of engaging in stock manipulation and accounting fraud. According to the Hindenburg Report, 3 offshore funds in Mauritius, Monte Rosa, Alara, and New Leena own a total of 36,000 crore worth of Adani Group stock. Now, for perspective, 1 crore is $250,000. So 36,000 crore would be equivalent to $9 billion. Now, these funds are not independently managed, as they have common owners. The report also claimed that these 3 funds are involved in surreptitious trading and market manipulation of the Adani Group stocks. Hindenburg's research investigation of the Adani Group was not limited to just accounting fraud. The firm alleged that the conglomerate was engaged in highly questionable transactions valued in the billions with the brother of its chairman Vinod Adani. The report accuses Adani of utilizing a complex web of offshore shell companies for the purpose of manipulating its stocks. Now, the Adani Group has denied the allegations and called the Hindenburg Report a calculated attack on India. The conglomerate has announced plans to take legal action against Hindenburg Research, to which the U.S. short seller has responded by saying it welcomes the plan and will demand documents in the legal discovery process if the group files a lawsuit in the U.S. against the short seller. In light of the Adani Hindenburg controversy, a Forbes analyst has uncovered that 3 investment funds with ties to the Adani Group have committed to buying up shares as anchor investors in the Adani Enterprises share sale. The 3 firms are Ayushmat Limited, Elm Park Fund, and Aviator Global Investment Fund, based in Mauritius in India. Together, these 3 firms agreed to purchase 9.24% of all shares available to anchor investors. Anchor investors are allotted shares the day before the share sale opens, and their investment often instills confidence in retail investors. The Adani Hindenburg issue has also raised concerns about India's corporate governance practices. A recent investigation by the Morning Context found that the Adani Group has not been spending adequately on its accounting practices, which is crucial for building sustainable and credible businesses. For example, in 2020 through 2021, the Adani Enterprises only paid a little over 7 crore to its statutory auditors, which is a modest amount compared to the 84 crore paid by rival Mukesh Ambani's Reliance Industries. The report also highlighted that the auditor who signed off on the books of the conglomerate's flagship company has only 5 years of experience, which may merit a review, and that the auditors are closely linked to each other. Adding to the governance risks and funding challenges, the Adani Group has also recently switched from a Big Four audit firm like Deloitte to Crowe UK, a British firm that's not even ranked in the top 10 UK audit firms. Crowe UK earned £143,000 for its 2022 audit of Adani Energy Holdings, compared to the £257,000 that Deloitte charged. As a result of these adverse developments, S&P Global Ratings recently slashed its outlook on Adani Group to negative, while Moody's has said that the group's ability to raise capital has likely been impacted. However, Fitch has stated that there's no immediate impact on the credit profile of the companies it rates. The Securities and Exchange Board of India is currently looking into the matter, but several questions have been raised about the role of lawyer Cyril Shroff on the SEBI's committee that is probing the Hindenburg Adani issue. Shares of most Adani Group companies took a nosedive on Monday despite the Indian government's assurance that their exposure to the group was within limits. Only 3 out of the 9 Adani stocks ended in the green, while Adani Power, Adani Transmission, Adani Green Energy, Adani Total Gas, and Adani Wilmar saw losses ranging from 5 to 10%. The group lost a whopping 31,534 crore in the market capitalization. This downward trend was fueled by a recent report from US-based short seller Hindenburg Research, which accused the Adani Group of using offshore tax havens, engaging in accounting fraud, and manipulating stocks, allegations which the group denies. The report resulted in a $110 billion loss in Adani's listed stocks in just over a week, and forced the cancellation of 20,000 crore share sales. Adding to the troubles, Standard Chartered has followed in the footsteps of Credit Suisse and Citigroup and stopped accepting Adani Group bonds as collateral for loans to their private banking clients. Credit Suisse assigned a zero lending value to bonds issued by Adani Ports and Special Economic Zone, Adani Green Energy, and Adani Electricity Mumbai. This means that clients who held Adani bonds as collateral may need to offer more cash or another form of collateral or risk having their securities liquidated. According to Mint, Adani Group's bonds were in trouble, trading at junk bond levels in the US markets. The report claimed that the yields on some of their bonds were skyrocketing past the average for global junk bonds. With yields rising, this signals that the company will have to pay a higher cost on their debt and increase the risk of default. This sudden surge in yields raised concerns about the company's ability to raise capital abroad. Goldman Sachs analysts, however, believe that the concerns about Adani's outstanding dollar bonds may harm investor sentiment, but won't have a widespread impact. The group may have to shelve its plans to raise $500 million from overseas bond sales and explore alternative financing options like internal reserves. Meanwhile, Adani denied media reports about cutting back on capital spending and stated that they are providing more collateral in the form of stock pledges to their lenders. You could say that it's been a rough week for the Adani Group, and their stock prices have gone from stocks to rocks. In addition to this, after Finance Minister Nirmala Sitharaman affirmed the independence of the regulatory bodies and their plans to take necessary actions against the Adani Group concerns, Securities and Exchange Board of India released an official statement reassuring the public of their measures to address any excessive volatility in the market. The SEBI emphasized its mandate to maintain the orderly and efficient functioning of the market and highlighted the measures it has put in place to do so, including the Automated Surveillance Mechanism (ASM) framework, which is publicly available for all to see. The statement by the SEBI aims to bring comfort to those worried about the stability of the market and to reassure them that the measures are in place to prevent any excessive fluctuations. In conclusion, the Adani Hindenburg allegations and the subsequent revelations about the Adani Group's financial and governance practices have sparked a heated debate and have cast a shadow over the conglomerate's reputation and future prospects. It remains to be seen how the legal and regulatory issues will play out and what impact they will have on the Adani Group's operations and financial health. Thanks for watching. To stay updated, subscribe to our channel and press the bell icon so you don't miss a thing.